Now, Tesla, what's going on with Tesla? 15% in the past month? Why does the stock just keep going up? Like, what is it going on here with Tesla, right? So, you got to understand something very important. This is going to I'm going to take you all the way back to the tech bubble and kind of what we saw there. Because if you look at Tesla, right, we had the blow off top in 2021. The stock went to over $400 a share, right? Peak excitement, growth was insane, interest rates were on the floor, and then everything changed, right? No more hype, no more excitement, no more FOMO. Interest rates went up massively, which destroyed countless companies that deal more in, if you have to take out a loan, interest rates, right? The highest interest rates we've had in several decades. If you all of a sudden have the highest interest rates in several decades, right, it's going to devastate the auto industry, right? It's going to devastate existing home sales. It's going to destroy furniture sales and those sorts of things. And if you look at existing home sales, you see that, right? You're starting to look at a lot of these auto companies and their stocks aren't looking so good and their sales aren't looking so good, right? Obviously, you've seen what has happened with Tesla. You know, look at an RH type stock, right? And a lot of the furniture related companies. It's not been good. And then, so stock has that blow off top, 400 plus, and then it has a tech bubble type crash, right? All the way down to around $100 a share. And I got some shares back around that time. I'll show you a screenshot in just a moment, right? That's a tech bubble type crash. It is 70+% historic crash for even Tesla stock, which is a very volatile stock. Even by Tesla standards, that was crazy, right? And now basically what has transpired since the end of 2022, beginning of 2023, is what I call a multi-year recovery. You don't, when a stock like Tesla falls that hard and you have interest rates go up as high as they have, right? Fed funds rate where it's at, you don't just recover right away. You don't go right from 100 right back to 400. It's not the way it works. It's many years of recovery. And you have to be prepared for that. It's going to be many, many years, right? This, by the way, shows you the shares I got back then. And congrats to anybody that was buying Tesla early 2023. You know, that was the most interesting time to be a buyer of Tesla, probably since I was buying Tesla back in like 2019 here, $16.97, $15, $14, $13, $12, right? But I got those shares right back there in January, $106 a share, 145 shares. There was a pretty special opportunity, right? And that was after the huge epic sell-off, right? But this looks back at Amazon in the, kind of before the tech bubble went pop and then after, right? And so Amazon downtrended for about 1.5 to 2 years straight, right? And then it bottoms and it starts coming back to life. Very nice, right? And ultimately, at the end of the day, it took Amazon 9 years to get back to where it used to be. 9 years. Now, do I expect it to take Tesla 9 years? So let's say 2030, right? Old highs are in 2021. So let's say all the way out to 2030 to reach new highs. I don't think that's super possible, but it is a possibility, right? Let's say we had a big major unemployment cycle, a big recession in either 2025 or 2026, right? What does that mean for auto sales in that environment, even if interest rates are going down? Well, shoot. I mean, if people are scared about losing their jobs, they don't want to take any risk out there and buying new cars or homes or things like that, it's still not going to be good for Tesla sales in that particular time, right? And so, therefore, that could be a tough spell to go through for the entire stock market, including Tesla stock, right? Which then it would have to recover out of that scenario. So let's say there's a scenario where Tesla goes up to 250 here in the short term, which is actually a possibility in the short term, right? And then all of a sudden 2025 hits, big recession, right? Or 2026, and it's like, oh, it's ugly. All of a sudden Tesla goes from 250 back down to 150, 175 or something like that. Is that possible? That's possible, right? And then it starts to have to climb back to 250. And then we can climb to 300, and then we can climb back to 400. And by that time, you could be all the way out to 2028 or 2029 or maybe even 2030 by that time, right? In terms of getting back above 400 again. So that's a possibility, right? And it is something we all have to consider. The one thing I'll say about that is Tesla's valuation, although it got very high, it wasn't as ridiculous as a lot of those tech companies back in the tech bubble days. Remember, a lot of those tech bubble companies back in those days, they didn't really have any real business model. Tesla's, last year did what? A little under, if I recall, this is off the top of my head, I think it was a little under $100 billion of revenue, right? Somewhere around there, roughly. Listen, No companies back in the tech bubble days was doing $100 billion of revenue or anywhere remotely close. The companies weren't even, most of them weren't even doing $1 billion of revenue, never mind $100 billion. So that was a different time frame. So I don't really like to say, could I see it taking 7 years or something like that for Tesla to get back? So let's say it takes out that 2028 high, or it takes out that old high of 400 plus in 2028 or 2027. I think that's a possibility, right? Something to consider there. You got to understand, when the new mass market vehicle hits in the market, there's going to be a whole ramp time there. It's going to hurt profitability in the short term. It's going to be a whole process to go through. Elon's talking about ramping that vehicle in 2025. We don't know. Like, Elon's time sometimes a little above. It might be 2026. That vehicle actually starts ramping 2027, right? And so it really starts to show up in the profit numbers more 2027, 2028. I don't know. Those are just all things to consider as far as that go. Robotaxi, you can't really draw any real numbers from that in the short term meaning the next year or two. 5 years from now, 10 years from now, it's a whole different story. Robotaxi revenues, I think, will be real, and I think they'll be substantial 5 years out or 10 years out. 1 year out, 2 year out, it's going to be minuscule, and I think that could actually be a loss leader in the short term, because I think ultimately Elon's going to want to price significantly under Uber and Lyft at the particular time to just take market share. And so I think that will actually hurt Tesla's profitability during that short-term time period. So I don't know, man. You look at it and it's like, at the end of the day, Tesla's in a multi-year recovery, but it doesn't go straight back up to 400, especially when you're doing as many big things as Tesla's doing and you're spending as aggressively as this company's going to be spending, right? It's very costly. You want to do all this stuff. You want to do an Optimus robot. You want to do a robotaxi network. You want to have a cheap mass market vehicle in the market. It's expensive to do all those things, right? So that hurts short-term profitability, which hurts your stock in the short term at least, right? So, but the way I look at Tesla at the end of the day is 2022 through 2023, we're in the storm. It was clear about that, right? It was just getting worse, and it was getting worse, and it was getting worse, and it was just negativity, and we know what it was, right? And that was the storm of those 2 years. 2024 is a year I look at Tesla and I say, we're kind of in the in-between time where you're starting to see the sun come out. You're still getting storm clouds. You're still getting rained on a bit, but you see the sun and it's coming, and it's like, it's a very exciting time because you see the sun coming out, right? After you've been through this big storm. And the way I look at it in 2025 and beyond is it's sunny skies ahead for Tesla in 2025 and beyond. So it's kind of done a big full circle situation, kind of goes back to like Elf and what we were talking about in terms of that stock going full circle. This is a very similar phenomenon with Tesla where it was all sunny days, right? And we went into all dark days. And now we're at this moment where it's kind of been dark days still in 2024, but you see the sun, it's right there and it's about to come out and you're about to get past the storm. And then 2025 and beyond for this company, ultimately, it's back to the sunny skies again. So that's going to be phenomenal in terms of that. Now, oil's down to $65. What the heck is going on here in regards to oil price? I think that's something we got to talk about. Listen, nothing's adding up here. Nothing's adding up. Look at this. Look at this. U.S. crude oil inventories fell by 2.79 million barrels for the week ending September. What? 2.79 million barrels? Inventories fell? Following a significant 7.4 million barrel decline the previous week. These aren't small numbers, folks. These are large numbers. 2.7 million barrels, 7.4 million barrels. Now, when you hear something like that, that should mean great news in regards to oil price going up, right? That's like the best news. Inventories falling? That's phenomenal. That means oil price is going up. And yet that's not happening. Nothing makes sense. The Saudis' cost of doing business in regards to oil keeps going up. Doesn't make sense. The fact that oil is trading at 65 doesn't make sense. No. Not at all. I don't see enough people talking about this. I don't see anybody honestly talking about this, but they should be talking about this, right? And I spoke about this particular way of kind of thinking about it in a video maybe last week or the week before, because I kind of thought about it like, okay, oil's pricing in recession, but oil's a dumb asset. Oil's a clueless asset. There's some assets that you kind of look at and they're kind of like tells on what's going to happen with the economy or not happen with the economy. Copper can be one of those many times, right? Oil's not. Oil's a clueless asset. Oil hit an all-time high during the great financial crisis, okay? During the great financial crisis, July 2008. This is as clueless of a clueless asset as you can imagine, right? but it's a very manipulated asset. So moral of the story is oil is insanely manipulated, as a lot of commodities are, honestly. And don't be surprised if come November, oil price starts spiking back up. Don't be surprised at all, okay? Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I wanted to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. Number 9 at 26 stocks. I do own this one. It is a recent buy for me. It is Estee Lauder. This is a cosmetics company. They own a ton of high-end brands. They're very different than an e.l.f. e.l.f. is focused on the lower end. They're focused on mass market. e.l.f. wants to sell in Amazon. e.l.f. wants to sell on Target. e.l.f. wants to sell at Walmart. They want to sell at the masses, right? Estee Lauder, they want to sell more higher end, right? They're going to be in some of the more department stores. They're going to be in some of the more high-end cosmetic stores. They're going to sell obviously through their own websites and things like that, but they're going to sell they're a different price bracket. A lot of Estee Lauder's products are $50 and above, if not $100 plus, right? Whereas an e.l.f., on the other hand, e.l.f. will sell at $5, $10, $15, right? One selling to the masses. Everybody's e.l.f.'s customer. Estee Lauder, it's kind of more of an RH where it's like the top 10%, 20% of income earners, wealthy, those sorts of folks. I spoke about Estee Lauder, if I recall, extensively on 4 Stocks I'm Buying Now, September 2024 edition. There's a 49-minute video there, so if you want to hear more about Estee Lauder, I believe that was one of the 4 stocks I spoke about there, okay? Next one up here, number 10 at 10. This is a stock I own recently, and I've been buying the stock almost every week. Literally almost every week for the last several months. I've been buying Nike stock, Nike, NKE. I mean, to me, this is a historic buying opportunity for Nike stock here recently. I don't think we'll get Nike at these sorts of prices that it's been here in 2024. I don't think we'll get that on Nike probably ever again. This is like a once in a generation type time for a stock like Nike. And so I look at this and I say, I've got to take advantage of this because I don't think, do I expect in 2026 to still be able to get Nike at $70? I don't. I just don't. I think this is that one freak time period we're going through here where you gotta snag shares of Nike. So we'll see. Now, by the way, Nike, if you want to hear me speak extensively about Nike, I think if I recall, that was one of the stocks I featured. 4 Stocks I'm Buying Now, September 2024 edition, so you can check that out. Wynn Resorts, number 11 at 26. I do own this stock. Smaller position for me. I want to buy this stock heavy for the next few months. Heavy. And the reason I want to do it, Wynn's another company that really caters to the high end of the market. A lot of the top 10% of income earners wealthy. You notice kind of a trend between a lot of these stocks I like to buy, right? But you know what is really intriguing about Wynn is, one, the valuation's on the floor right now. Incredible kind of buying opportunity here. 2, we're about to go into a rate cut cycle. That's probably going to last, I would say, at least a year, if not 2 years. A rate cut cycle that's going to be a 1 to 2 year rate cut cycle. It's going to be great for Wynn. Great for Wynn. We know these resort companies always have to take out a lot of debt to finance new properties, right? They might have to refinance debt, those sorts of things. And so Wynn sets up very well here with us going into a rate cut cycle now at this point in time, right? And so in inflation, not really an issue, shouldn't be an issue for at least a year. 2 years out, 3 years out, we'll see what happens with that, right? But as far as at least the next year, we're looking good. So the Fed's got the clear signals to cut. That bodes very well for Wynn Resorts in the end, right? And so their numbers are pretty much all-time highs across the board when you look at their numbers. Macau continues to come back, year after year. Obviously they were closed for several years or partially closed for several years, and just, you see the major upticks continuing here. And this is in a China that is not even seen as strong right now, right? If China can really get some footing over the next few years and strengthen, it's going to help that Macau region in general, right? And keep in mind, Macau, that's not just like, it's just people from mainland China go to Macau. It's also just Asia in general. It's what Vegas is to North America, right? What Las Vegas is, my city I live in, what Las Vegas is to North America, Macau is that for all of Asia. And so that's just something to keep in mind. Like it's not just dependent upon mainland China, although there's so much money in mainland China, it's ridiculous. Like all the negative stuff you hear about, China this, China that, right? There's still so much money in China. It's ridiculous, okay? Ridiculous. So always do keep that in mind when you see all the negative stuff. Wynn is another stock I spoke extensively about on 4 stocks I'm buying now, September 2024 edition. So if you want to hear me talk in depth about Wynn, that video is the one to check out. Number 12 of 26 here, Shopify. Shopify. Listen, this stock's always an easy buy. This is very similar to an Amazon type story in regards to just one of those stocks you can feel comfortable buying it year in and year out and just buy, right? Now, obviously, it had the blow off top situation back in 2021, right? Everybody was forced to be home. E-commerce was crazy. Shopify's growth rates happened to be crazy at that particular time. And the stock market was crazy, right? Willing to pay all types of crazy valuations. And we know what happened with Shopify stock, right? Shopify will take out those old highs and go much higher. Shopify has the making of, if you're thinking about like what could be the next generation of trillion-dollar companies, right? And that's something I spend some time on, kind of always thinking like, who's the next ones in line over the next decade that will become like a trillion-dollar company? When I look at Shopify, I see the type of company there with the type of DNA that could reach $1 trillion market cap someday. And when I think about Toby leading that company, when I think about their employee force, when I think about their asset-light business model, their innovation, continue to focus on more software-related things, right? And making their customers' lives easier, coming out with services in relation to that. When I think about their pricing power, I think they set up very, very well for not just the next year, but really they set up well for the next decade, 2 decades, right? And that's the way Toby's really engineered that company. So I love it. I absolutely love it. Now, I did a video back in February. Oh, actually, it was on Valentine's Day. See, I told you I love it. Did I not say I love it? I did this video on Valentine's Day. That proves how much I love that stock, right? I did a video on Valentine's Day, buy Shopify stock and don't stop. And that video went, 27 minutes in depth on Shopify. If you want to learn more about Shopify and my thoughts in depth about Shopify and why I view it as such a great deal, such a great opportunity for the next many years, you can check out that video there. Next one up here, number 13 to 26, we'll call this halftime. PayPal. I own a lot of shares of PayPal. If you watch my channel, you know this was a stock I was buying very heavily over the past, I would say, year or so, right? Very heavily. I own a lot of shares now at this point in time. So in regards to PayPal, they own not just PayPal, they own Venmo, and they own Braintree as well. Alex Chris, the new CEO, continues to have that company innovate at a rapid pace since he's gotten on board. I can only imagine like the new products and services PayPal is going to have in the market 2 years from now, 4 years from now, 6 years from now. That's just a little food for thought in regards to that. Now, I still went very conservative with my PayPal projections here. And you can see why this is such an exciting stock, right? If we look here, I've been doing only 8% revenue growth per year, 2025 through 2028. When I think about all the innovation Alex Chris has a team working on, I gotta be honest, I think there's a decent probability Alex Chris is going to get this team back to getting the company back into double-digit growth rates, which PayPal has not seen for quite some time. But I didn't want to run it banking on Alex Chris being able to get the team to that double-digit growth. I said, let me still go more conservative. So I went 8%, even though I feel like as time's ticking on here, I'm getting more confident Alex Chris will get this company actually back to double-digit growth, which they don't need to for this to be a successful stock. That's the best part. Net income growth should outstrip the revenue growth extensively over the coming years as he runs his company lean and mean. So I think they're going to be able to do around 15% net income growth per year over the next number of years, which will put them in 2028 at a net income margin of around 18% here. And this company should command somewhere between about a 25 and a 30 PE, very similar to like American Express, Visa, those sorts of companies you can usually find a lot of times around a PE of 25 or so, which would put the CAGR on the low end, compounding annual growth rate of about 27%, on the high end about 33%. So PayPal is a pretty extraordinary opportunity. You can see why I bought so many shares of stock. And the risk reward, it's too attractive to pass up. It's too attractive to pass up. And so, yeah, they got a new marketing campaign that I absolutely love with Will Ferrell. Oh, man. I mean, I'm very impressed. Like, since Alex Chris has gotten here, whoo, baby. Like I told everybody before Alex Chris got hired, I said, this isn't a broken company. A lot of people thought this is a broken company. No, you look at PayPal's revenue, it's up and it's up and it's up. That's not the sign of a broken company. Revenue down, sign of a broken company, right? If your revenue is just going up and up and up, it's not a sign of a broken company. This was a broken stock. And it was a company that needed some tweaks to get them back charged into high gear to get this company going. Alex Chris is that perfect man. He's fixing the stock, getting analysts to understand the company better, getting investors to understand the company better. I'm already starting to see it. And he's getting the employee force to work on the things that really need to be done, doing these little tweaks to make PayPal better, Venmo better, Braintree, make the whole services suite. Partnerships are happening left and right with this company. It seems like every other week you're getting a major partnership announcement between PayPal and some major partner. I love it, man. I love it. So they're making all the right moves. Alex Chris is making all the right moves, and I'm very impressed with him so far. And obviously, PayPal sets up very, very well, and that's why I invest a lot in this stock over the past year, right? It's arguably my favorite stock I've been buying over the past year. That tells you something, right? Next stock up here, number 1426. I don't own any of the stock right now. I used to own it back in the day, but I don't own any right now. It's Uber, Uber stock. So Uber, obviously we all know Uber. I don't need to describe Uber to you, right? It's a massive rideshare service and food delivery. Everybody knows Uber, right? But here's the deal with Uber. Their net income growth is going to exponentially outstrip their revenue over the next number of years, right? Really, especially 2025 to 2028. The company's really been scaling revenue for years and years and years. And that's really been their main focus, right? But it's about to shift more to net income, kind of moving forward here. So I have them doing about 12% revenue growth a year on average over the next number of years, while they do net income growth of about 45%. Now that puts them at a net income margin in 2028 of about 14%, which is still not the highest number, especially considering this company is really, the more I look at it, the more I'm like, Uber is kind of more of a SaaS type play. It really is, right? They're asset light. They're not the ones that own the cars. They don't own the drivers or anything. They're actually an extremely asset light business model. So to get to a 14% net income margin, 2028, I don't think it's impossible to do. Now, as far as P's go, 25 to 30, I think is about appropriate for this company, which puts it at a CAGR of about 14 to 19% come 2028. I think that's very impressive. So Uber actually looks really interesting. Now, you may say, what about the robo-taxi thing? Here's the deal. Uber is going to partner with other companies. They're going to be able to get that done. I'm not really concerned at all about that. And I do believe that, like, if we look out 10 years from now, right, which keep in mind, when robo-taxis start to scale in a meaningful way, I mean, it's going to be years from now, right? But I do believe that the two main players in that market will be Uber and will be Tesla. I think it'll be Tesla versus Uber. I think ultimately Lyft might end up getting bought out over time. I don't think they'll be able to get bought out by Uber, but I wouldn't be surprised if Lyft gets bought out by a Google or somebody like that maybe wants to try to play Waymo. If they can get Linda Khan out of the FTC, maybe. I don't know. We'll see. But anyways, the moral of the story is Uber. It's going to be Uber and Tesla long term in terms of my opinion. But for now, Uber's the big dog there, and I think their numbers are looking really good for this next bit of time. I don't own any right now, but I might own it in the future here. Zoom Communications, 15 and 26 here. I do own a small amount of the stock. I bought it recently. I want to own a lot more. And it's crazy. You look at the stock all the time. It's only up 2%. And it's fascinating to think the company in this amount of time became one of the most famous companies, certainly during Rona, right? Everybody zoom. And yet the stock has nothing to show for it. But I think it's an extraordinary opportunity. The income statement looks great for this company. The balance sheet looks phenomenal for this company. I'm talking top tier. Like, compare them just about against anybody, and you'll say this is one of the strongest balance sheets you'll ever find. And so I'm looking at this company. It's actually really, really attractive recently. I never thought I would own Zoom, but I had to buy some recently, and I want to actually buy a lot more, hopefully. So Zoom, it's not going to be the most exciting revenue growth opportunity. I had them doing only 5% per year revenue growth, 2025 to 2028, and then doing net income growth about double that, 10% per year over the next number of years. Net income margin is about 28%, which I think is about right for kind of a SaaS-related company, honestly, when it comes to Zoom. Pretty sticky business model, 20 to 30 PE ratio on this one, which puts it at a CAGR of about 12% to 24% in regards to this one. I think that looks pretty good. And I actually like Zoom. It's actually a buy. It's a buy, man. You never thought I would say it, but it's a buy. Etsy, number 16 to 26. I don't own any other stock right now, but don't be surprised if in the next few months I start a position here. It just got kicked out of the S&P 500. Boom, you're out. Palantir's in, okay? Now, that puts a lot of selling pressure on the stock, obviously, right? People are going to sell it, and then people are going to be forced to sell it since it's not in the S&P 500. So there's going to be selling pressure on Etsy for probably the next 3 months. And that's where I look at my opportunity here in regards to starting a position here. And remember, there's going to be likely tax loss harvesting on this one as well coming in the next 3 months. So you got being kicked out of the S&P 500, compounded with tax loss harvesting likely in the fourth quarter. It makes for a very ugly setup for Etsy stock in the short term. A stock that's already been taken out and kicked out, right? Awful. Now, Etsy has actually a really nice market that they kind of own. And it's this market of, essentially you want something custom made. You want kind of, non-generic type, Amazon type stuff, right? Amazon's a place you're going to go if you need some elf makeup, right? Amazon's a place you're going to go if you want to order, a new monitor for your TV, like general merchandise like that. Etsy's the type of place that you're going to go if, you're looking for something special for somebody's birthday or a holiday or something like that, right? Something cute. That's where you're going to go for Etsy. Somebody might make it in their own living room for that matter, right? And so there's kind of a little bit more of a community feel around Etsy. And that's a nice market for them. And honestly, there's no one that really competes there very well when I look out. Shopify, that's not their specialty, right? Shopify can enable small businesses to do that, but it's not really their specialty. Amazon, it's not really their specialty, right? They're kind of more focused on mass general merchandise. eBay, not really their focus either. They're kind of more general mass merchandise, but in an auction form. So Etsy has a nice market here. I actually like their market, right? Now, the other interesting thing is you look at the forward P, the 2-year forward P, 20 and 18 in the stock, right? And this is still an early days business model. Like 5 years ago, did anybody really hear of Etsy? Not really, right? This is still an early days business model here. So the fact that it's at those sorts of PEs and might go lower here in the short term, given everything I talked about at the front, this could actually get really interesting in regards to Etsy. Now, I put this company at very conservative numbers of only 10% revenue growth a year, 2025 to 2028, and net income growth of only 10% a year for the next 4 years, right? And I kind of did that because I figured Etsy's going to probably market pretty heavy over the coming years. And so I don't think they'll get much leverage in regards to getting that net income up further than their revenue, right? Which puts them at net income margins of only 10%, which is not very good for really an asset-like business model like Etsy, right? But I wanted to run those, right? 20 to 30 PE on this one still gives me a CAGR of about 8% on the low end and about 20% on the high end. I like that from Etsy. So I got to say, Etsy, don't be surprised if I buy the stock here coming up, right?